This is NewsNation Rush Hour, and we start with the rough day on Wall Street. Stocks did rebound slightly at the end of the day. You can see right there the NASDAQ closing up about 6 points, while the Dow took the biggest hit, falling nearly 300 points. The S&P down almost 30, and this all coming as anxious investors worry about the security of the nation's financial institutions, of course, after last week's collapse of two banks. So joining us now with what this could all mean for your bottom line is Dan Roccoto, finance professor at the University of San Diego. Dan, it's great to see you, but I feel like if we are starting with you, the news may not be so good. That's not an insult. What is your advice for the average American who's sitting at home, seeing these headlines, doom and gloom on Wall Street? What does all of this financial turmoil mean for them?
I thought we were going to talk about March Madness. Hi, Nichole. How are you? It's upsetting. It's painful. It's confusing. It is normal. In our system, we have cycles like this. Think back to the financial crisis. Think back to the Ukraine war. We can go through history. It happens. The villains change, Nichole, but the plot remains the same. It's unsettling, and that's a natural thing that we feel. It's a natural emotion. Listen, it's all about confidence, and the fact is, right now, there's not a lot of confidence on Wall Street. And when there's a storm on Wall Street, Main Street gets wet. And that's what's happened the last couple of days.
Yeah, it certainly has. Dan, we've really seen these smaller regional banks which have collapsed, people lining up outside trying to withdraw their money there. But what about the people who bank with some of the biggest American financial institutions, places like Chase, Bank of America? Should those customers be concerned?
Yeah, and these are powerful images, no question. And it has this emotional response. Here's the good news for everyone listening tonight. In over 90 years of its history, the FDIC has made sure that no depositor ever anywhere in the country has lost a penny, provided you were within the FDIC insurance limits. So if you really want to double check that, you can go to the FDIC website, make sure your bank is on there. That should make you sleep a little bit better tonight. These big guys are actually in pretty good shape, Nichole, to your point. If you compare sort of where they are today financially versus, where they were before the financial crisis in '08, liquidity looks good. The capitalization looks good. It's not to say we're not going to have more bumps, as you and I have been talking about the last few days, but the big banks in general look pretty good.
And Dan, I want to ask about the bailout, right? Because President Biden says that the taxpayers will not bail out these failing banks, that they'll have to pay for it with fees, et cetera, et cetera. But who ends up paying those fees in general?
You and me. So, one man's bailout is another man's lifeboat, right? So, and here's the way this works. I'm going to break it down really simple. Banks pay a fee to the FDIC to get the FDIC insurance. And therefore, there's that fund that the FDIC has to help us through times like this. So the president's absolutely right. That's where the money presumably would come from if there are losses. But we don't really know the whole story, because who pays those fees? Well, ultimately, it's you and I, Nichole, because we're customers of the bank. The bank prices that into the price of doing business, the cost of doing business. You and I, at the end of the day, are going to pay.
All right. Well, Dan, we always enjoy talking to you, even if the news isn't always so good. Thank you, Dan. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.